Welcome to the live stream session of paper trading prior to FOMC. Right, I will be focusing on NQ for today, and as you can see right here, I have just taken my long position. Going to go through why. Right, so on the 5 minutes, you can see that right here, this is your proportion on the block. This is your last two down close candles. We have traded above this swing high, closing above this swing high, and then we have this down close candle. We have closed above this down close candle as well, and today it's a seek and destroy market profile. And when you take a look at 930, where is 930? This is 930. So 930, price came back up, and then straight away we got this sell-off. So right now what I'm thinking is that the retails are short and their stop losses are above 930, which is why I'm looking for longs. Okay, so right now we have traded above this inversion fair value gap. And as you can see right now, it's more like a high resistance liquidity run. So I can't really shift my stops to this swing low even if I wanted to. As we approach the lunch hour, I believe it's going to take out this highs up here. So right here you can see that we have closed above this consecutive down close candles that took out this swing low here, and then it is also trading, we have shifted higher above this inversion. So right now this is what one of the characteristics of high resistance liquidity runs, which is why I'm paper trading today, during this session here. So let's take a look at 5 minutes to see what it's actually doing. I'm gonna just take a look at the order block here. This, in my opinion, is the last chance for price to reverse higher. It's a 75% of this order block. Closing below 50% is a red flag, right? And this is what we have right now, closing below 50% and 75% as well. So this is why you don't want to push during this market condition. So how could you tell if it is a, let me just take it out, if it is a high resistance liquidity run or if it is a seek and destroy? It's very simple here. So this candle is the Asia session. We are trading within yesterday's PM session. Okay. During London, we took out Asia's high and Asia's low. So this is your first indication that in the New York AM session, it is going to be seek and destroy conditions. As you can see right here, during the New York AM session, we took out London's high and London's low. So it's kind of like a expanding cone. This is your signature. This is the signature for seek and destroy profiles. The other thing is that we have two candles within this order block, within this PM sessions range. So this indicates that most likely we are going to have a very large displacement later on during the PM session for FOMC, if it hasn't already displaced during the New York session. And for my latest video, I've annotated what I want to see. You can watch that if you're interested for FOMC. Alright, so back into the lower time frame tradings. Over here you can see that we have closed below 50% of the proportion on the block. At the same time, we have closed below this up close candle. So the next reasonable draw on liquidity technically would be the low down here. And so I'm going to push the buttons like I usually would, and you will be able to see that more often than not I'm going to get stopped out. I'm treating this as the breaker, which is why I am shorting right here. Right here, as you can see, the breaker. Any trade up higher into this small tiny little fair value gap or this up close candle, I will enter more positions. stops above this wick here. TP, this low here. Because we have closed below this swing low, I don't think we're going to come back up here. Consequent encroachment or the 25% level, I'll add another position. And there's a tiny little fair value gap here. Naturally, I would like to see this fair value gap respected, and then it starts to drive lower naturally. Right now, as you can see, we have been in the whole consolidation, and price is not in the very high probability condition. So if it wants to trade into this wick here, I'm going to add more. I do not want to see any candle body closing above this wick here, the consequent encroachment of the wick. If you look all the way to the left, this right here, inversion fair value gap, which is why once we got this candle here, actually I wanted to see price trade back up into at most consequent encroachment and then drop, but due to the current condition, this right here should be anticipated. So over here, I like how we are closing below the body of the two up close candles. At this point in time, this candle should expand below this low, and I want to see speed below this low into my objectives. So how does it confirm speed? It is when we get a closing price below this swing low. Now over here, this is something that I don't want to see, right? We have taken on this swing low, but not only did we not manage to close below the swing low, we are also unable to close below the consequent encroachment of this week, right? So you can see here in this candle. At this point in time, I believe it might want to go for one more round above this swing high, like a one more stop hunt. It can do so at this point in time due to the fact that we are unable to displace lower below this low with speed. But if it trades higher, I'm totally fine because I can add more positions and I'll just treat it as high resistance liquidity run. That's all. Alright, so at this point in time, I would like to see teleportation candles towards my objective. Stops should be break even by now above this swing high. If it ever comes back up again, it means that I'm going to restart on my position here within this range here. small little fair value gap. I'm moving my stops above this up close candle. There you go. Paper trading. Alright. Account history. Right here. Okay. Just focus on the last trade here because I took it right here and I got stopped out. Right. So right now what's next? At this point in time, it could want to just expand below Tuesday's low. Utilizing this as the inversion fair value gap.